Tesla stock went under a very important transition over the past week, which was a 3-to-1 stock split. Now this led to many investors freaking out as it looked like the value of their Tesla stocks had plummeted, but what had simply occurred was the 3-to-1 stock split of the Tesla stock. So today, what I'm going to do is explain that stock split to you, the benefits and the drawbacks of it, as well as what is a stock split and what is the opposite, a stock consolidation. I've partnered with Crypto.com to provide my viewers with an awesome opportunity to accelerate their crypto journey. Crypto.com is used by over 50 million users in 90 countries across the globe and is a leading platform for buying, selling and staking crypto. They also offer metal Visa cards with a huge range of rewards that allow you to convert and withdraw your crypto in fiat currency. Crypto.com is offering a $25 sign up reward using my affiliate link in the description or by entering affiliate code RyanProven. How's it going guys? Ryan here and welcome back to another stock video. Today we are taking a look at Tesla's TSLA stock and it's undergoing of a 3-to-1 stock split over the past week or so. And this has been a very fundamental event for Tesla as it has resulted in a lot more shares being put on the market. This 3-to-1 stock split basically means that there are now 4 billion Tesla stock on the market at this point in time. So it has tripled in number from previously. But as a result of that, Tesla's price has dropped from $900 all the way down to $300. But do not freak out. And I know many people would do, especially if this is their first time encountering a stock split. For every one stock you held in Tesla, you gained an additional 2 stocks. So that means in fact, you haven't really actually lost out at all. What you have received is 2 additional stocks, the price has dropped, and we are now sitting at a new price. But the overall value of the shares that you own remains the same. Now, when it obviously opened, Tesla then went through a period of going a bit up and a bit down, but ended up finishing in the $290 range. I think it was at about $294. So for those of you who were looking at that and freaking out, you do not need to panic. Your money is still, in fact, quite safe, or as safe as it can be in any stock, and the value should have remained the same, and over time you will be compensated. And the reason I say that is because many different platforms take periods of time in order to process the stock split itself. So for those of you who have not seen the new shares hit your account just yet, don't panic. It can take, up to a week for various different platforms or banks to actually process the split itself. So let me give you an example of what happened if you held 1,000 Tesla shares, just as a nice round number. If you held 1,000 Tesla shares prior to the split, you will now hold 3,000 Tesla shares. Now, your 1,000 Tesla shares at $900 per share obviously meant that you held $90,000 worth of Tesla. Now what you hold is instead 3,000 Tesla shares. The price then dropped to $300 roughly, and you still do hold that $90,000 worth of Tesla shares, but it's just divided up in a different way. Now there are a number of reasons that a company would perform a stock split, but one of the most important reasons is barriers to entry. It is much harder to own one stock or any stock at all in Tesla at $900 than it is at $300. What this does is it allows smaller investors to actually gain a foothold and own Tesla stock without the remaining holders being actually affected by that, and it allows basically a new suite or a new swathe of investors to come in and start buying up the stock. Naturally, this results in a big influx of people, and as a result, it would likely drive the overall stock price of Tesla up with it. So what you're actually going to see is hopefully an increase in the value of Tesla's stock over a period of time. The new investors who are getting in should see a pretty quick return on their investments, and the previous investors will continue to see growth in their existing holdings as well. Now, there are some drawbacks when it comes to a stock split, and one of the key things here is it allows ease of manipulation of a stock. So of course, even though we're sitting at $300, it's much easier for a bot, for instance, to buy and sell a $300 stock than it is to buy and sell a $900 stock for a profit. So that's sort of, I suppose, the key drawback in my opinion. This would be a much larger negative on a smaller stock. Let's say if it did a similar sort of stock split and was sitting at 90 cents and it dropped down to 30 cents, that would really affect the value or the ability for the stock to grow naturally if there were people or bots targeting the stock itself. A company like Tesla, where its stock is still worth so much money per share itself, means that you should not see this sort of a manipulation in the same sense as you would in a microcap company, for instance, where the stock prices are significantly smaller. Now, companies can also perform what is known as a stock consolidation. This is the opposite of a stock split, and instead of issuing more shares onto the market for people to get into, they increase the barriers to entry, reduce the amount of shares that investors are able to hold, and therefore drive up the price per share in order to get into a stock. You'll typically see this in smaller companies, and these are companies which are normally raising capital on a relatively regular basis, and as a result diluting the shareholders that are currently holding. And as a result of that, there are lots and lots of shares being issued to the market, making it easier for people to obviously A, manipulate, but also B, it makes it significantly harder for that stock to actually grow and compete over time. For large companies and growing companies though, you're not going to tend to see a stock consolidation occur, and this is due to the fact that you want to encourage investors to continue investing in the company. The whole point of the stock consolidation is to try and reduce the dilution that the current shareholders are experiencing, as well as protect themselves from potential manipulation from whether it be shorters or bots. So for those of you who were freaking out when you saw the drop in value of Tesla, I hope this has really put your mind at ease. There's nothing to worry about, and in fact, it should be very, very beneficial for existing shareholders, as you're going to hopefully see a slow, gradual increase in the value of Tesla stock purely due to a brand new influx of investors able to gain a foothold, and of course existing investors seeing this as a brilliant opportunity to top up on Tesla stock. That's going to wrap up the video for today, guys. I hope you did enjoy it. Make sure you leave a like if you did, and if you want to see more of this sort of content, hit subscribe and turn on those bell notifications. I'll leave it there for today, guys. I hope you have an awesome day. I'll see you next time. Cheers.